these things come to me, dressing price. All my rings got weight to it. You feel that? You feel that? Hey, you heard that? Classic.
All right, hey everyone, welcome to our first episode of Insight to Impact. What we're going to talk about first is the National Association of Realtors recap for 2025. Jason, tell me a little bit about what you're seeing in some of those trends and what is popping out to you.
Yeah, a couple of things that popped out that was surprising to me was the first-time home buyers sinks to an all-time low is one of the things we read about. And it said that 21% of buyers out there are first-timers. And then what more stuck out to me was the median age was 40 years old. That just seems old to me for buying your first home.
It's definitely different from what it was.
Yeah, I mean, back in the day it was...
I think it said 1980s was 20s.
Yeah, and obviously the affordability question is what holds a lot of people back. There's a lot of stats that we're going to get into that lead to that, but it just was a little shocking to me that 40 years old was it.
Another one that I saw too was that it's record high in all cash.
Yeah.
So right now it seems like a lot of people are, and I think that's dictated partly by the market. We're seeing a lot of cash offers. It's their financial stability, but it's also what the market is saying. Hey, in order to be competitive, it's got to be cash.
So the other thing we've seen in 2025 is a higher down payments, where the average was 10 to 19% down payment, which is a little staggering from a couple different perspectives. I think that leads to why first-time home buyers maybe only made up 21%. That's a big chunk of change people are looking at. But what you just kind of referenced was the how competitive it is out there. That is one thing that real estate agents look at is how much is the down payment, and they want to put their best foot forward. So they're putting down bigger chunks because, you know, as a first-time home buyer, you don't have to put that much down. That's just what they're seeing, and I think that's making some home buyers take a step back, saying, I don't want to put that kind of money down.
And it's 10% for first-time home buyers, and I think they said up to 23%. It's typical or our average for experienced home buyers, averaging about 19%. So that's a really interesting stat because of the way that the first-time home buyer products are out there, everything that's available. And I wonder if people know about that, right, or if it's an educational issue, or if they just find that that's what suits them best.
Yeah, I think what you just touched on is the educational piece. I just think there's a lot of education not out there about buying their house. And I say this to a lot of people, but they don't talk about mortgages in high school. They don't really talk about it in college. And right now, with the affordability being the hot topic, people, I think a lot of them just think, I can't do that right now. I don't have 10 to 19% to put down, or I've got too much debt, or I've got this, or whatever it is. And it's just, a lot of it is just, I think people are afraid to ask. And if they do, they ask AI, and then AI may give them a good answer, but do you understand the answer?
So do you think it's potentially even an issue with real estate agents and the mortgage companies, mortgage loan officers of education?
Well, and not knowing what questions to ask. I've said to me, hey, buying a house is scary. I'm like, yeah, it can be, but if you know what to ask and you educate yourself, or you're working with the right people, because there's bad real estate agents, there's bad loan officers and who don't educate, and that can lead to I think we're seeing some of these stats. They're just like, I'm going to stay on the sideline and save up a bunch of money and buy when I'm 40.
I think exactly what you're saying is that 76%, I think was the stat, 76% of first-time home buyers lean on their real estate agents to help them with understanding the process. Mm-hmm. So it's really a very important piece that maybe needs a little bit more education. Yeah. Another one I saw was real estate agents are essential, or they remain essential. And in 2025, statistically, 91% of all transactions were done with a real estate agent. Real estate agents are vital, they're important. The role that they play, we just talked about it, potentially with education and some of the other factors that are in the market, which we'll cover in a little bit, but they remain a very vital piece to the overall market as a whole.
Yeah, and then we also talked about, or we saw with 2025, FSBOs for sale by owner hit a record low, which I think kind of backs off what you just talked about. Well, 91% was it that you said?
Yeah.
Are using a real estate agent, so that means there's going to be less homeowners who are willing to take the plunge into selling their house on their own. So we saw that 2025, which I think is a good thing, because I think one of the stats we looked at was A FISBO average sales price was 360. With the real estate agent, it was 425.
Yeah.
So I think that speaks to, and I know NAR has put the stat out before that, you know, you're going to sell your house for 10 to 15% more if you use a real estate agent.
One of the other things that I thought stood out in this report was also that the typical seller has owned their home for 11 years. Now, back in the day, it used to be that people would stay in their house for 5 to 7 years. That was kind of the mark. I'm sure part of that has to do with increase in mortgage rates from their all-time lows. Part of it probably has to do with increase in house prices and the appreciation that we've seen in house pricing over the years. That and then COVID. I think between all of those factors, we're seeing a shift in the market.
Yeah, well, and add on that too, over COVID, what did many people do over COVID? They're stuck at home and they made enhancements to that house. They added the hot tub, they added the pool, 4-season porch, whatever it is. But I think that's why we're seeing this 11-year stat come into play, because they took that home they were stuck in over COVID and made it what they wanted to be.
Yeah.
And I think now they're staying there, and that combined with, maybe we already covered it, but 4 to 5 houses have a rate of 6% or lower. That's going to take you towards staying in a house longer.
Yeah. So 80%, exactly what you're saying. 80% of people right now in the market on their for a mortgage have a rate of 6% or below, which means that a lot of people aren't leaving. People who are comfortable with their rate at their 2, 3, 4%, they're not going anywhere. They're going to do enhancements rather than going to do it. Because what are they going to get out of it? They're going to get a smaller house potentially. They might get a higher payment if they're going to get the equal house. So for them, unless there's a real need to move, they're not going to.
Yeah, and it could be the smaller house but with the same payment.
Right.
So they're going, why am I going to do that?
Right. Fewer households with children are buying homes. And one of the quotes in this report says, a reduction of home buyers with children is likely being shaped by a reduction in birth rates and rise in older repeat buyers. For all of you people who are on X, Elon Musk talks about this a lot, the idea of birth rates and the collapses of societies in different countries. But birth rates are declining, and that is a big factor in the houses. And all of the the older generations, I should say, who had kids and were building larger homes to house their families and kids are downsizing. And what's going to happen with those homes? So whether people are staying with them because they've got a great rate, but when it does come time for them to move out, who's behind that going to be buying that up if the birth rates are dropping?
Right.
Another one we saw was that home buyers and sellers are getting older, and we talked about that the first-time home buyers are now right around the age of 40 instead of 20. But the other part of that is that the average home buyer and home seller are ages 62 and 64. And when you look at that, that's a completely different number than what we're used to. And the idea of people getting into first-time home buying, this just really speaks not only to an affordability issue, it speaks to a lifestyle issue of are they moving to a different place? Are they getting closer to kids? And are they moving around for other reasons where a lot of other people are staying? So that age group is really more where you're seeing the activity.
Well, I just don't think it's a different, everything changes. That's what life is. But I think many people don't look at that home purchase as a right away goal like it used to be. Like you're buying in your mid-20s, I'm out of college, I got a job. Now it's, hey, I'm going to enjoy life, or I'm going to save up this, or I'm going to do that, I'm going to wait. And we're seeing that with waiting to have kids and now waiting to buy the house at the median age being 4 years old. It's different times. And I think it's good stats to look at to see if you're a real estate agent or a mortgage officer or anything, how you're going to curtail your business with this information, because it's not like it used to be.
One of the last ones that we saw too was that people are buying for the long haul. A lot of people who are purchasing now are looking at that home as something that they're not going to be leaving for 15 years. Maybe it's even their forever home. And that's how they're looking at that purchase. They're not looking at it as I'm going to be here for 5 to 7, like we used to see a lot more, and then I'll move on to a bigger home and continue to roll my equity. But a lot of people now are saying, hey, this is the home I'm going to plan on being in. The younger generation is still in that 5 to 7 because they don't know what their life is going to bring. Sure. But as it gets into the older categories, you're starting to see that people are saying, hey, this is where I'm going to be, and they're comfortable with that.
Well, I think the other side of that too is they may not have a choice because of the affordability issue. And I just think about friends, family, other people I know that, I'm going to be in this house for 5 to 7, and now they're in year 8.
Yeah.
and it's not always a bad situation, but it could just be, hey, it doesn't make sense to make that move at this point. Rates are higher than where I'm at. I mean, all those things come into play, but it is worth noting because, again, you already mentioned it, but the 5 to 7 used to be pretty standard. You were moving or refinancing every 5 to 7 years, and obviously the stat is saying that's the ways of the old.
So that article was actually from Melissa Tracy, who is an editor for Realtor Magazine. Next thing that we're going to get into, which is a continuation in essence of the 2025 information, but this is coming directly from the National Association of Realtors. So the number one reason that the age group of 26 to 44 is buying a home, according to the National Association of Realtors, is in cost savings. What's kind of your thought on why maybe people are saying, hey, this is a cost savings for me?
Right. I think, in my experience, what you just said is kind of where it is. It's like that, maybe you're first-time home buyer, you got your college roommate, hey, I can buy this, we can do this together cheaper than going and paying rent, at $2,000 a piece. And also, I think it kind of goes back to, it is an investment. I think some people are seeing that real estate still is an investment. There's lots of people who talk about bubbles and this and that. All the stats we're looking at still show that we're going to see a probably 2% increase in appreciation, and still house value is still the way to go. And I just think the other part, though, is just with inflation and groceries, and the cost of everything is higher. So if we can get into a house, and you kind of have a set monthly payment when you have your house. Obviously taxes can go up, but for the most part, hey, here's my rate, here's my payment, I know where I'm at, as opposed to every year maybe my landlord's jacking my rent up, and I'm looking at this saying, hey, this is more of a fixed cost I think I can manage.
The number two reason that home buyers are actually buying a home is for the health or the caretaking of aging parents, or to spend more time with aging parents. And that is a big pocket of people who are buying homes. It's really more about parental care, right, or being close to them in that age group.
Well, and a lot of things I think we're seeing too is you have the parents who are moving in with their kids who have kids. So you've got babysitting. Again, this all goes back to affordability and the cost. And I know many friends of mine and some younger ones who have moved mom or dad or whomever in with them, and I got an in-house babysitter. That cost of childcare is crazy. And I think the flip side of that is the aging parents who don't have health issues. The healthcare costs of assisted adult living, those costs are nutty.
Yeah.
And I think they're looking at this from
well, same with daycare.
Yeah, and they're looking and going, hey, I think back to the cost savings. This is a cost savings. We don't want to shell all that money out. Keep mom and dad close and save some bucks.
Yeah, the third one is that children or relatives over 18 moving back into the house, or children or relatives over 18 that never left.
Right.
That's the third group of people who are really the reason they're buying these homes. Again, very interesting, because those are not conversations that are typically had. And I think from a real estate agent perspective, if you're hearing this and listening to this, is what are those conversations around how and why people are buying a house? Are you familiar with these? Were you aware of that? And is that something that you're talking to your clients about? Because they may have a different goal than what you anticipated or what we thought was the goal before.
Yeah, like me, like my wife and I sold our house, so that couldn't happen. We didn't want the kid coming back, so we, downsized. But I think you're right, though. It's a different world than it was, 20 years ago. People look at things differently with the kids. I know some people who want their kids never to leave. I know some parents that need to kick their kids out at 18. But I think, to your point, real estate agents need to think about that when they are interviewing people to potentially buy and sell. Like, what are the plans? It's not what it just used to be that I'm going to retire here. And now it's like, well, I might have my parents move in with me. I might have a 25-year-old come back. The other kind of sad part on this is 50% of marriages end in divorce. Some of these people can't handle the affordability on their own, so they're moving back in with mom and dad and maybe save that back up so they can get back out. So just a lot of factors come into play.
Yeah. You look at the whole picture of buying a house as part of your total financial picture. Right now, across all age groups, the average is that 2% of people see the home as part of their financial security. And that is so different than what I think we were used to, or what we were taught, what we talk about.
Well, what blows my mind is how many people look at where interest rates are currently, and as we sit here today, they're 6-ish range. They look at that as a high rate, but then they're drowning in credit card debt at 23.99, I think, is the APR average in the United States. Student loan 15%, and that's okay, but
Yeah.
6% interest rates, which is typically an appreciating asset, unlike a car
Or credit card.
Yeah, I mean, we talked about earlier. I think it's an education piece, and if you're thinking about getting into investing in a house, or you already have one, it's just you want to educate yourself because there's a lot more factors than it used to be. Get your 30-year mortgage, Dave Ramsey it, pay it down, and be done with it.
Yeah. Good debt, bad debt, and that's been a conversation for a long time too. Is good debt is buying an asset, using that asset, and to potentially buy other things. Bad debt is your consumer debt, the things that people are buying. And we know now that, I think the last stat, I know it's well over $1 trillion. I don't know if it's like 1.2 now, or it speaks to affordability, but it also speaks to lifestyle and what people are seeing as important. Let's talk about the real estate market as a whole in buyers as to what they are paying right now in the market. So what are you seeing as a stat for what people are buying as far as a list price?
Well, based off what this is telling us, they're paying 100%. Like they're paying list price plus. I think, what did this say? Like 33. Well, no, it was
50. I think it was 54% or 55% actually.
Yeah. So basically, what that tells me is, I mean, if you're going out there trying to lowball, good luck. I mean, it's just the market's still strong. I mean, we've seen certain parts of the United States start to convert to maybe a little bit of a buyer's market. But I think overall it's still a seller's market, because one of the other stats we'll probably get into is concessions, like how many houses are being sold with concessions, or we saw something that was kind of surprising, the home warranties. And it just says that, but I also think that houses are priced pretty well. And this, I think, tells you that because they're listed at this price, so they're selling at that price. Because other stats, again, I'm jumping ahead, but we'll be looking at how many times had a price reduction, and that kind of stuff. But basically, it's just telling me that houses are selling at usually what they're listed for plus some. So if you're out there trying to lowball, you're probably going to be disappointed.
I think that right now the stat shows that it's 84% of homes are being sold at 95% of their list price or higher, with one of the categories being 101 to 110% of the list price. There's 19% of houses being sold in that group. The expected length and tenure, we talked a little bit about it earlier, and the idea that people see their house. So the age group of 18 to 34 is one, they kind of see this as a 4 to 5 year investment, which is what we traditionally had seen in the past. But when you start to get down, another part of that same group sees it, and as all age groups see that 8 to 10 years is an important milestone, and then 16 years or more is actually the largest pocket. So when we look at down payments, there's programs out there for mortgages that range from zero down to however much you want to put down. Where are people pulling that from? And we said right now that 2% of people per this report see it as part of a financial picture or as financial security. Right now, the ages of 26 to 59, they're primarily pulling money from savings. Second group, 45 to 99, are seeing it, their down payments are coming from the proceeds of their sale of their primary or of another home. And speaking to this, I think the older generations look at this buying a home as an investment, as an appreciation. And I think we've seen that there's a stat out there or a chart, and I can't remember, I'll post it in the video, is that the only 2 years in the last 30 have we seen a declining environment where the house pricing has actually pulled back. The other 28, 27 years have actually seen an increase in appreciation. And so you're looking at buying a house, but you're potentially pulling from savings while the older generation is rolling that over. So what's the best option for you? That's something you're gonna have to talk about and consider, not only with your financial team, but your real estate agent, is what's the best route for you to go. But with appreciation, we've seen it historically has been one of the best ways that people have done that. So if you're buying a house for an asset, it's potentially a good option.
Well, and again, like you just hit it, but houses still appreciate. I mean, and like I say, it's always, we've all seen, there's occasions, 2008 happens, I don't see that coming again, but it still, to me, makes a lot more sense to make that investment in your house and yourself. And but I guess what I'm trying to get to is this older generation who's selling using proceeds leads us to another stat we're going to talk about, which is the cash. Because I think they have invested and their house has appreciated. In some markets, it's appreciated 10 to 15% in some years. And now they're able to sell, take those proceeds and pay cash, which was a staggering stat I saw, that how many houses were selling for cash. Because they had these proceeds and they can do that.
What keeps people from buying a house? And when we look at that, one of the bigger pieces that we're seeing is that it's debt.
Yeah.
It's debt that they've taken on. Again, mentioned earlier, lifestyle choices, desire to have things now, whatever that might be. So the sacrifices that they might need to make, that up to 54% of people have delayed their purchase of a home for 5 years or more due to various factors that they have in other debt. It's slowing that down. So again, we're talking about needing the money and savings to buy a home, and that's where a lot of people are pulling it from, and that, but they're also delaying it for 5 years or more because of other debts that they have. So it's this yin and this yang about what should I be doing? If I want to buy a home and have an affordability issue is one piece, but habits are a second part of that.
Well, I think it's a part of the instant gratification society we're in. They want that stuff, and I'll refer to myself as an older person. Back in the day, you waited to get those things because they were luxury items. And again, I know it's a different world. I get off my lawn, but I just think that nowadays some of these kids, and they have such instant access to that credit card, and you don't even have to frickin' put it in the machine now, doop, and it's yours. And it's just so simple. And I think that's where a lot of this, I mean, you mentioned earlier, 1.2 trillion in national debt. Well, credit card debt. But I mean, it's so easy to access that stuff. And
well, Apple Pay, anything on your phone, it's almost casino-like.
Yeah.
You don't even need the money anymore. It's on something, and so all I got to do is have it and
convert it to
swipe
chips
it
as soon as you can. It's like Monopoly.
and then there you go. So there's no pain of it being pulled out until later. But yes, the instant gratification dopamine is now.
Right.
There's three categories that really are the driving factor behind why they're delaying. The first one is that they have a high rent or current mortgage payment that's high. Another one is credit card debt. We just talked about that. So 37% of all buyers have delayed for 5 years or more because of the fact that they have credit card debt. And again, is that a necessity to living, or is that behavior in what they want to buy, have it now, and then I'll worry about the home purchase or of an asset later, going back to our conversation about how they see it as part of their total financial picture in all of that. Another one is student loans and then car loans. I think the average payment now for cars, I think last I saw $800, I think was the statistic. But I know that some of these more expensive vehicles are running $1,000, $2,000, and we see that with people who are buying, that their car payment is eating up a majority of their income. And so, do you buy the car first? Do you buy the house first and then the car? Some of those decisions are what's also delaying people in buying their house. So what are some of the sacrifices that people need to make potentially if these are the things that they're saying? You want to cover some of those?
Yeah, I mean, we've kind of been going down this path on this last bit of conversation here, but cut spending on luxury items or non-essential items. Again, we don't want to beat the dead horse, but the instant, hey, I need this, I need that, or my buddy's got that, I got to go get that. You know, it's just shocking to me. Cut spending on entertainment. Again, I mean, I get it. You want to be gratified and satisfied, and all these things are out there, but those are one of the things you got to cut back. And then this is, I think my wife led this stat: cut spending on clothes. I mean, but and again, I know we're cracking. Maybe I'm making fun of it, but I mean, Amazon Prime shows up on the regular at my place, and it's always closed for my wife, usually. But I mean, it goes back to what we were just talking about. She's like, oh, it's so easy to do that. I mean, she's sitting there on her phone having a conversation, and literally in an hour, something can be at our doorstep. And I think it's so easy to spend that I see how some people can fall into that trap of having too much debt. but these are the sacrifices, you know, if you want to buy a house. And again, I am a big believer of buying houses. I think it's an appreciating asset as opposed to the car, which is as soon as you will drive it off the lot, it's appreciating. And I think it goes to education and just making sure you understand, you know, because people say, hey, is it a good time to buy a house? And, you know, the joke is realtors always tell you it is. Well, it could be, depending upon your situation. I mean, most people have debt, but just because you're in debt doesn't mean you can't buy a house. I mean, if you're in too much debt, yeah, we look at that. But these are some of the main sacrifices that you need to make. I'll just throw some other ones. These weren't the top three, but like canceled vacation plans. I know a lot of people that go on vacations, and I'm like, I don't know how you're affording that right now, but they don't own a house, so.
Yeah, and maybe that's why they like their travel.
Right.
So of those top three, though, outside of the vacation, but those top three, that's more than 60%
Yep.
of the reason that people are not saving and or being delayed in buying a home.
Yeah, I can't imagine my clothing spending and my entertainment spending being so exuberant that I am not gonna buy a house. I mean, it just blows my mind.
Why are people being turned down for a mortgage? You might.
Yeah, I mean, you know, lots of reasons there, obviously. Bad credit scores, excessive debt, so a debt to income ratio, meaning they can't qualify for that house.
Which goes hand in hand with that, just the previous slide we were just talking about, or
Yep.
the report.
Yeah, or a big one, income is unable to be verified. So self-employed, and there's lots of different people who could fall into that category. But I personally just think that's, again, education, because there's programs out there for people who don't necessarily show a tax return making a lot of money. But I think sometimes,
Like give an example. What are some programs that might be?
I mean, there's like a bank statement loan where you could show 12 months of consistent bank
Okay.
deposits. And I know lenders that will use an average of that to count that as income. Or there's the DSCR loan, debt service that, you know, I won't jump into all that, but there's options out
Yeah.
there. And again, you'll hear me say this throughout all the podcasts we do, is just, it's education. And it's just doing that research to know what is available to you, because I say it a lot, like a lot of people just take no for an answer, especially when it comes to buying a home, and there's options out there. And not all lenders have them. You gotta, again, educate yourself to know who to go to, but yeah, those are the main. So debt to income ratio, low credit score, which those kind of go hand in hand. Insufficient down payment was another one, which
Which we just talked about, savings and
Yeah.
spending money on other things and delays. How do buyers view homes as a financial investment? What was really interesting in this report shows that 79% felt like, as all age groups, felt like it was a good financial investment. But that doesn't bear out in the fact that only 2% see it as part of their financial picture and security. So they see it as a good investment, but I like my other things. And maybe that's really not a big piece of that. So there's really a kind of a contradiction there. 39% saw it as better than stocks. 28% saw it about as good as stocks. 12% didn't see it or not as good as stocks. And then what was really interesting is this bottom two was not a good financial investment and don't know is 20%.
Yeah.
So is that a taught? Is that a lack of education?
I think it's a combination of both. I mean, we talk about, you know, generational wealth and things like that. I think sometimes it comes from the families. Like, not all families are in a position to buy a house. I know many people who, their parents didn't have a house, they were lifetime renters, their parents were lifetime renters. So I think it's a mixture of taught, education, and, you know, just seeing, that's what I came from. I mean, I personally bought a house when I was 20 years old, but that's what my parents did, and I just thought that's what you did. And I know many people who just are renters, and that's what their parents did, and they don't see that value piece of owning a home as that investment. But yeah, I mean, 20%, that's an alarming amount.
Don't think it's even potentially a good investment, don't know.
Yeah, I mean, it's the old adage. I mean, your landlord loves you. You're paying off his assets.
Well, and I also think that there's people saying that you're going to own nothing and you're going to like it. You know, you're going to enjoy that. So is this part of that thought? And actually, the younger generation, there's also a change and a shift in their buying dynamics. Not only are they here and now and instant, and you know, we talk about the Apple Pays or the other things, but there's a big push for that generation that they have gig jobs, they have side jobs, they have a different lifestyle. They don't want to have the same things as what their parents had. They're into crypto, they're into another piece where they feel like that's where money's going to be made versus owning traditional businesses or boring businesses. So there's a dynamic shift in the market as a whole, which is leading into this home side of things. They're fine renting, they're fine living off of this new technology that's coming out.
Well, I think with that dynamic comes along with part of that is they don't want to feel bogged down with home ownership. It's like, hey, look, I want to be able to do this. I want to be able to do that. Maybe I'm working here and I have an opportunity to go. It's just different. I think setting down the roots with the younger generation is a big a deal, which I think goes back to other things we've already talked about today, which average person's 40 years old, buying their first house. We're not reproducing like we used to. So, because it's again, a different dynamic and it's shifted. And again, there's nothing wrong with it necessarily, but it's just, I think bettering yourself and, you know, what's the impact going to be of these different traditions that we're seeing now?
What are the incentives that we're seeing that sellers are offering as part of getting that house sold? Because, you know, earlier we saw that 95%, a majority of homes are being sold at 95% or higher, up into the 110 plus percents of the list price.
Yeah, I mean, I think home warranties is one that you and I looked at. I was like, I wouldn't even have thought of that one. You know, assisting with closing costs, I thought that would have been a bigger number because, you know, basically what that is you're asking the seller when you buy a house to help you pay for my closing costs and other things to keep my out-of-pocket lower. And
to go back to the conversation that people are struggling to save, to get a down payment, you would think that it would be a much higher percentage.
Right. But I mean, there are some goofy ones out there. I mean, I have seen incentives as like a car. I'm going to give you the car that's in my garage to come along with that. Maybe you touched on it, but I thought too, I was surprised that 76% of all sellers didn't offer anything. Because they didn't necessarily feel like, I guess maybe they didn't have to, a hot market, it was going over a list, like we read about earlier, 100 to 110% of some of our homes are selling at 100 to 110% of the list price. But yeah, so I mean, those are different things that are out there, incentives that do attract some buyers. And a lot of times they're just rolling it into the purchase price, but it's a way for you to get protection, like with the home warranty. I understand why people do it. I just was a little surprised to see that be the top one.
2026. What is 2026 going to hold? We'll talk about rates. Let's just cover on that for a quick second. So we get asked the question, if rates are being cut by the Fed, you know, how come my interest rate isn't dropping down all of a sudden? We really watch the 10-year, and as the bond market is being priced in, while they have some correlation and some impact, they're not directly associated. While the Fed drops rates, it doesn't instantaneously mean that we're going to see a drop in mortgage rates. A lot of the times those are priced in because of the bond market ahead. They're expecting a cut, 25, 50 basis points, and then you'll see a reaction once they announce it. If it was expected, stays pretty calm. If it was below or if it was above, you'll see a reaction in the market the other way, and then that has an impact back to interest rates. So interest rates are dynamic and they're live all the time. It actually operates very similar to the stock market, that anything that happens in the stock market, the bond market moves, and because of that, you see changes in interest rates. One that I see coming down the road is what we call the yen reverse carry trade. They brought their interest rates down to close to zero, and for the longest time, if you're bringing your bond market down to zero, you can borrow money from Japan and then allocate that into assets across the world, whether that's other bonds. If I borrow at zero and I buy a 4%, I'm making 4%, a 4% bond, I'm making 4%. So there's that piece. People have used it for real estate, businesses, any of a variety of topics. But what happens now is that, I think it's this week actually, you're going to see that the Japanese market, they're going to raise their interest rates. And if they do, you're already starting to see it climb, and I put in a chart here inside of the video that you'll see as this has increased from almost zero to now close to 2%, if they continue to climb, you're going to see what's called a reverse carry trade. So people are going to come back and they're going to have to either sell some of their assets as that gap begins to tighten. They might be having to refinance at a higher rate. They may have to pay that off. You're going to see a sale of other assets. You got China, who is potentially struggling with their real estate market. And the idea of all that is there's global economics that have an impact here locally. All these pieces together can have an impact on where rates go and what's going to happen in the market and affordability. So when we look at 2026, what are some of the trends that could potentially happen? And what we want to do is we want to look at Realtor.com's report that they have for the 2026 housing forecast. So what are some of the things that they're saying might happen with interest rates?
Well, I mean, as far as rates go, and as a whole, they're predicting 6 to 6.3, kind of in between there for most of the year.
So what about everybody saying that it's going to drop?
I'm not saying that, but I don't see that happening. And I think you and I have discussed this. If it does, that means something catastrophic has happened, which is not good to make those drop. I just don't think that's gonna. I just don't see that coming into play. I think you're gonna see a lot of clients asking about adjustable rate mortgages because that's a little bit lower rate, a little risky in my opinion, but that's there. But I think as a whole for the year 2026, if you're listening to people who are telling you rates are gonna drop, I don't think that's solid advice. And I think you need to be gearing yourself up if you're thinking about a potential purchase or refinance, that you're gonna be a rate in the 6s. And that's not bad. I mean, I know it doesn't sound as good as 3,
but historically,
I know, and people get sick of hearing that historically, but I mean, again, just in my time in the real estate market, in 97 rates were 10%. Then rates dropped to 7.5, and everyone thought, "Ooh, hallelujah, that's the best thing since sliced bread." And now, if you say 6.5% to someone, they freak out. And I get it. It's what's recent. And yes, people got rates at 2.5. I personally had a rate at 2.25 that I had to give up, and it sucked because I bought a new house and rates were 6. But it's just again, I say it a lot. It's education. You just need to know what that means to you. But very long-winded answer. Just I don't see a lot happening next year. I don't think I'm going to see a lot happening with inventory either. I think it's going to be fine. I think it's going to be very similar to what we are wrapping up right now in 2025.
So it's also interesting, and we talk about the macroeconomics of the whole market, is that the Dow is at an all-time high. So you're seeing records in the 48,000s. You're seeing gold at an all-time high. You're seeing silver at an all-time high. Historical mortgage rates are right now at a low in the 6% market. The national debt, however, is up around 38 trillion. So that's a potential issue. Credit card debt, we mentioned, all-time high. The reverse carry trade, we mentioned that as well. And the other piece about the reverse carry trade, people don't really know the impact because it's been for so long. Estimates are that it's anywhere between 1 trillion to 20 trillion in potential issues and how that money could flow back and forth or in and out of investments.
And what we're seeing here in this report is a very modest, I think it was 2.3% increase in home sales. So not anything major, nothing too impactful, but still showing that we're gonna have a little bit of increase. People still gonna be buying and selling, just not anything. I mean, again, when I came into 2025 and 2024, there were many people touting, "Oh, rates are dropping to 5.5. We're still gonna see 7% appreciation in homes," and that didn't really pan out. And I think this is a more modest prediction that I think that's where we're gonna be. I mean, I just think 6 to 6.3. Houses are still gonna be, and people still gotta buy and sell. It's gonna happen. It's just we're not gonna be setting any records. Because what was that one stat? Oh, it was anticipated 2024 existing home sales were just over 4 million.
Yeah.
And they think that will remain a 29-year low.
Yeah.
But I don't think they see us really surpassing anything crazy in 2026.
Zillow has a market heat index. So you have some regionalized and localized areas that have got hot pockets and cold pockets and things that are impacting the market. The next one that I'll put on the screen there is the market hotness index. And you'll see that different parts of the country are cooling and different parts of the country are actually taking off. And a lot of the Northeast is really actually relatively hot still, where you're seeing a lot in Florida and the coasts of other places are starting to cool. or what is the impact of current mortgage rates? In this report, one of the things it's saying is they're calling it the mortgage rate lock-in effect.
Well, I just, it's there. What this is basically was, you already said 80% of people at a rate of 6% or lower, and I think what it's causing is, well, people don't want to move, they don't want a higher rate, and it's just, there's like, I'm just gonna stay here, so that means less inventory on the market, so less homes for people to come out and buy, and I think that's why they're hoping. And I know Trump said it a million times, like he's going to get rates down into 5s or whatever. I think mentally, when people hear a rate in the 5s, they can stomach giving up that 2.5% to 3%. I just don't think that's going to happen.
Yeah.
I think the 6% is the new normal. It still is a great interest rate, and we don't need to rehash all this stuff about how high credit card interest rates are in cars and blah blah blah. But yeah, I just said it's really affecting. What people are doing, because they're not turning and burning like they used to, staying in the house 5 to 7 years and I'm out. It's 11, as we talked about earlier, and that really has an impact on markets and how the cost of affordability to get into the house, because there's just not as much there to get.
Yeah. Another factor too that people may not realize though is that the Fed has just ended quantitative tightening and are leaning into quantitative easing. They're not calling it that, but they just announced on the last meeting that they're going to be buying $40 billion of bonds. We are starting to buy our own debt. So they're going to try to push money into the system to ease what they anticipate. And so when you're looking at house prices potentially going up 2.2%, if we have inflation, and some of these things like the reverse carry trade that we mentioned earlier, they may have a different impact. They may raise rates because they have to draw in investment. Mm-hmm. So interest rates might go up versus going down. So there are some other things that could pull levers that we may not anticipate as well. And then new construction is another trend that's out there. We're starting to see that builders have really ramped up it, but then in the last part of 2025, they've actually pulled back because tariffs, wood, other pieces that are part of building a house is a potential issue. But on the flip side, there's a lot of inventory, so they're offering great incentives for people to below market rates, buy downs, parts of the house that you might be able to get appliance packages, lawn, other things to get you to buy. And in fact, I think this is the first time that we've seen in the real estate market in a while anyway, that the cost per square foot on new construction is actually cheaper than what it is on existing home sales. So that's another option for people who are looking at the market as a whole as well. So that's kind of a cover, again, for the total market for 2025 and what we saw based on these reports, and then also 2026, some of the things that we might anticipate seeing in 2026. Anything you want to add to that? No,
I think, the footprint is there for what we think 2026 is going to be. I don't think it's going to be terribly different than 2025. I wouldn't be surprised if we do see some things that cause the lever to go up and rates go the other way. But yeah, I don't mean to sound boring. I just don't see anything drastic happen.
Yeah.
I think it's going to be a ho-hum year, good time to buy, could be, depending upon your situation. But I just don't think any catastrophic things are going to happen. Like that one Zillow hot chart showed. I mean, yes, there are places that have some values that are decreasing and are going to have a reset. But as you saw, a lot of the stuff in the Midwest is still red hot. I think it's going to stay that way. Supply and demand is still there, and home ownership is still a great thing. And again, I'm not telling this for everybody. I think it is for everybody at a certain time, if it's the right time. But I don't think anything crazy is going to be happening as we roll into 2026.
What we want to do now is take that conversation into a little bit deeper into each of these categories. And what we're going to do is bring in some real estate agents and, like I said before, a CPA and a financial planner, and talk about what they see in their part of this market as a whole, and the total financial picture from a buyer's perspective, from a seller's perspective. And if you're a real estate agent, what does this mean to you? We appreciate you spending some time with us. Throw a like at the bottom, subscribe. If you want to be a sponsor, we're happy to talk with you about being a sponsor to our podcast as well. It's Aaron and Jason, and we appreciate you taking a few minutes to spend some time with us.